Hello traders, Jason here with SwingHigh.com. It is Tuesday, February 16th, 2010, and this is your post-market analysis. So the big news today is that most of the markets were up up over 1% across the board. Oil gained 4%, the dollar dropped, and so we had good earnings, and commodities were leading us higher. Let me pull up the indexes here. We have the S&P up over 1.5%, the Dow up over 1.5%, the Nasdaq up 1.2%, give or take. The financials up well over 2%, 2.15%. The Russell's up 1.6%, the dollar down 0.85%, and gold up 2.5%. So, what do we see here on the intraday analysis of SPY? We see a gap higher. We closed at resistance on Friday at 108, gapped right into this 109 resistance, pulled back very slightly, not much effort to even retest or close the gap, pulled back to 108.50, put in a, well, let's zoom in here, put in a double bottom formation, confirmed right here at 10:15, came up, tested the highs again. In fact, we broke above the highs, chopped around them for a little bit, for maybe about an hour, and then just chopped sideways for most of the day under this 109.30 area, 30 to 40, and closed pretty much on the highs of the day with a slight pullback. So what I'm seeing on a broader time frame is that we're testing this 110 mark, and that's big. We do have a breakout of that bull flag. I'll show you that on the daily, and we are coming up here and testing 110 now. It's going to be very important. Let's zoom out to the daily right now. Here is the bull flag breakout. It's going to be very important for the bears to keep us under 110, and especially the 110.40 through 110.50 mark, as you can see from these highs right here. If we break above that, that's going to be good news for the bulls and bad news for the bears. This whole breakout of this bull flag formation, in fact, Thursday, Friday, and today, could be considered part of the breakout. All of that was on pretty low volume. So volume not participating in today's jump higher. And we are sitting at resistance, so I would be cautious here going long. And so the volume is something that takes away from the bull case. Let's also look at the market internals. The VIX is another thing that takes away from the bull case. The VIX barely dropped 2% today, on a 1.5% move on the broad markets. I would like to see the VIX down at least 4.5%, but we only got 2% down, so that's not much confirmation there on the VIX. So that takes a little bit away. The TRIN and the TRIN-Q, however, were incredibly bullish today, hovering around 0.5 all day. Here's the TRIN-Q, also the same picture, around 0.5. So a lot of volume flowing into stocks on the rise, and not so much into stocks on the decline. Here's the tick, and down here we have our thin red zero line. As you can see, mostly bullish on the tick. Almost all of the ticks were above that zero line. The tick Q is a little less bearish, but for the most part it was, bullish, excuse me, but for the most part it was a bullish reading on the tick. Just gonna quickly look at the daily of gold. As you can see on the GLD daily chart, we have a bull flag or a falling wedge here, and a breakout of that on decent volume, but once again not that great. So it's a similar picture to the S&P 500 there on gold. And the dollar on the daily chart looks like it might be making a double top here. So that's it for today. Thanks for being a part of SwingHigh.com. I'm incredibly busy for the next week, so don't be surprised if my next post-market analysis is going to be next Wednesday. And that's that. I will talk to you later.